to need, just bear with me because the screen recording is going to record a different screen.
Okay.
So what I'm going to have to do is switch Google Meet around for a second and share a different screen. So I want to be sharing this one. So hopefully you can now see this screen.
Yes, I see the
Right,
trade
brilliant.
trading view.
Yeah, so what I'm
Yep.
going to do is I'm going to bring across a different trading view. Okay, I think we're ready to go.
Okay.
So what I'm going to do is let's take off a few things. Right, give me a quick background about just your trading history and what you've tried and what you've done, what's worked, what hasn't worked, what you prefer to do, your trading hours, the sessions, that sort of thing.
My trading hours right now, I do trade the Asian session sometimes, most of the time when I get home.
Yeah.
Uh, I've traded manually. That's probably my most successful. I do some robots. I have passed a couple challenges.
Are
Uh,
you funded at the moment?
I am funded at the moment, yes.
Okay, who with?
True Forex funds.
Very good. How are they treating you?
Pretty good, pretty good. But I tell you, for U.S. traders right now, it's pretty rough.
I know.
Uh,
I know
yeah.
it's affected my business because I'd say 40% of my clients are US clients.
Oh, no kidding. Yeah, I mean it's really rough going for DX trader and C trader or C market. And it's basically you don't know from day to day what they're going to swap with.
They do what?
They're taking y'all off MT4 or MT5 platform, moving to
Yeah,
DX trader.
I get that. Do you think that's a permanent thing?
Yes, I do.
Do you?
I do. Yeah.
Yeah, you see, we talk an awful lot about it, and we don't know whether it's a political thing motivated by. I know it sounds really strange to say, but the unrest around the world in certain regions
Right.
may be wrong, don't know, but
It
it's
very well could be.
yeah, it's certainly a sea change that's affected the whole industry without a doubt. So how do you trade, or how have you been trading, and how long have you been trading, Troy?
I've been trading for about 8 to 10 years, probably,
Right.
uh, in the forex market. I've traded stocks and mutual funds and all different types earlier, but just for about 10 years in the forex market. But I'm a manual trader. I'm a trend trader. Uh, Basically, just looking at RSIs, stochastics and stuff, and trading that way.
Okay. Very good. So
Old
you
school.
well, yeah, I've come from the same school. I flew to Austin in Texas in 1997, which is when
Mm,
I started. Um, Learnt the old school, as you say, method of trading before there were, well, TradingView didn't even exist. Um, to be honest, the internet was only just establishing itself at the time, and I started trading options with a firm out of California, opportunities in options.
mm.
And in year one, I lost $200,000 trading, which was a lot of money back then, to be fair.
Yes, that's a lot of money. Yeah.
Yeah, well, it's obviously it's a lot of money today, but I don't know. I walked away for about, I don't know, I can't remember, maybe a year. Still had a lot of money because I'd done very well when I was young, and came back into it, lost again, walked away again, and I think the third time round, it took me probably about another year before I cracked it, and
That's good.
realised that the most important thing, in my opinion, is not how fast you can pass a challenge, and I'm using this as an analogy, really. It's passing the challenge. In other words, it's not about how fast you can grow your account. It's about how you can protect your account and make sure that
Right.
it's you never lose the account. You know,
Yep.
because what
It's
I
all
would,
risk management.
excuse me.
It's all risk management. I mean, when people understand that, they understand the market. So,
Yeah, absolutely. You can imagine. I genuinely have trained over 450 people. I've stopped training this year because last year I got exhausted because, training 2 or 3 people a day, different parts of the world, different time zones.
Right.
2 hours can get to 2.5 hours quite easily, and then when you've rendered the recordings and distributed everything, it's quite an exhausting process. But in that period of time, you can imagine the stories and the personalities that I've met, and
Yeah, I bet. I bet.
you can I can tell you that the biggest thing that is prevalent in the industry, and I would say this is irrespective of age or race or education, is that the majority of people will not deviate from what they think trading is all about, and that's 1% a day every day, and there's a way to do it, and that's their target. And yes, you can do 1% a day, but it takes extreme discipline.
Yeah. Yeah.
And you can't just glibly open a chart and think, well, there I can see a bit of divergence, so I'm just going to dive in there, as you know.
Right.
And the clients I've had the longest time, and the clients that I manage funds for, are clients who generally are happy with 3 or 4% a month, because they're funded to the tune of $500,000 to $4 million, and
Right.
that's the sensible way to stay in the business, in my opinion.
No, I agree. You have to trade slow. I mean,
Yeah.
I've actually took the turtle trading class, so yeah. I mean, it's all about risk management. I mean, when people realize that, they understand it.
Yeah, you've done the turtle traders, have you?
Yeah, a long, long time ago. I started off in commodities a long time ago.
Yeah, well,
Yeah.
when I came out of options, I went into commodities myself, and the guy who trained me was associated with. He wasn't a turtle trader, but he was associated with those guys, and I just remember so much back from those days, which are still part and parcel of the fundamentals of my psychology as I'm trading. That things that
Right.
just haven't changed. Um, the main things that really changed is the technology and the prevalence of indicators and now bots. But we'll have to. The jury's out on the bot situation, because,
Right.
well, I don't have to tell you, you know enough.
Yeah, yeah. I tell you, it's right now. It's very difficult. So
It is. It is. It
yeah.
is. Yeah. As you know, I've got a portfolio of hundreds of bots, and 1 week a group of bots will do you good at 6%, and then the next week they'll lose you 1.5%, and the clients that come on board in that week are very disappointed. So it's tough. It's tough.
Yeah, it is. Yeah,
Yeah.
it is.
Anyway,
Yeah.
let's get into this. The first strategy that I originally trained was used a bot called the Oracle, and it was a
Mhm.
martingale system called the Get Funded Trading System.
Right.
You may or may not have heard of it.
I actually have that system. Yeah.
All right.
Yeah.
I still quite like the system. The only thing that obviously I don't like is the martingale part of it.
Right. That's what I don't like. I don't like martingale. I
Yeah,
don't like grid.
yeah,
Yeah.
exactly. It's got very, very sharp teeth. Doesn't matter how conservative you think you can trade with it. So what I prefer now with manual systems is pure price action,
Right.
and interpreting what we see on the charts very carefully. So what I've basically got here is a system that bridges the gap between Asia closing and London opening.
Okay.
That's what it basically does. But you'll see as we go through it that the structure behind the entries isn't necessarily restricted to what I call that black hole. And by the black hole, I mean the hour between 7 o'clock and 8 o'clock UK time.
Right.
And I call it black hole. I'll show you why. Because if I bring in the start of London, and if I pull London all the way into where it ends on the way I've got this system set up. Let me just hide that. And we bring in Asia. I'm really talking about this black hole hour here. This is where I'm trying to exploit.
Okay.
But you'll see as we progress, it's not necessarily restricted to this time. This is just a change over time, a change over in session time, as you're well aware, where sometimes it's easier to exploit things like divergence because of the smaller amount of liquidity that's actually in the markets. And as soon as you start and trade London, you start and get the big trends come straight in. So it more or less trades anything, and we look at it this morning on the 5-minute, and all I've basically got, Troy, is I've got, as you can see, the Asian session high or low, which is this indicator. Asia session high low midlines.
Okay.
I'm not concerned about the midline. I could turn that off if I wanted to. And I've got the Lux Algo, and actually the Lux Algo indicator can do exactly the same thing if you wanted it to. You can have the Lux Algo following Asia. I prefer to have them separate, purely because the Asia session high-low midlines continues the high-low lines for a number of hours.
Right.
Whereas Lux Algo doesn't. So you've then got to start and draw horizontal lines if you're going to continue to trade for another 3 or 4 hours. So that's what I basically do. So what I've got is that when I say price action, what I'm looking for is I'm looking for a reaction to the high of Asia, or I'm looking for a reaction to the low of Asia, which is basically if we come into the black hole and we test the high of Asia, I'm actually looking not to continue that trend upwards. I'm looking for a short term. I'm looking for this to act as resistance, the top of Asia, and support at the bottom. And I am using quite a handy little indicator, which I'm sure you're well aware of, called the UT bot alert.
Yes, I've heard of that one.
Yeah, it's quite handy at picking up what we used to call many years ago. I've actually still got the manual literally next to my desk, called the 5 vertical trading part in. Let me get it. The Kent Calhoun Stock and Commodity Technical Trading Manual 1996 mid-year update. And the software that we were using back then was the 5 vertical bar trading pattern interactive real-time software. Now what it did was it basically cleverly tried to pick the highs and the lows, and it would determine when this swing low was over based on 2 things: the setup bar and then the entry bar. If the high of this bar was higher than the bar before it, then that, just by very nature of the fact that it closed higher than this close, became a setup bar. But as we know, anything could then happen. This bar could then come back down. It could be an outside vertical bar. It could be anything. But if this third bar then continued that continued rise upwards, and it closed higher than the setup bar, then this here would be a 5 vertical bar trading pattern buy, and we would be actually buying at that point there. because
Okay.
it would highlight that swing. And at the top here, this bar there would be the 5 vertical bar trading pattern sell,
Okay.
quite simply.
Right.
And the UT bot is quite good at getting, sometimes it gets these swings very quickly, and it's an indicator that doesn't repaint, because I won't use anything that repaints for
Yes, I agree. I agree.
obvious reasons.
Yeah.
So you'll never see this indicator repaint. What it will do is, as that candle is forming, you might see the buy signal flash once or twice throughout the 5 minutes. And when the bar closes, it might have disappeared. If it's disappeared, it's gone forever. But if the next bar starts to trade and your buy signal is there, that buy signal is set in stone. Okay. Right, and so what I'm trying to do is I'm trying to look for a reason. I'm trying to look for validation in coming back down into the London session. Excuse me. And the validation and the confluence that I'm looking for is I'm looking for divergence, Troy. That's what I'm looking for.
Okay.
And I look for an indicator that I'm sure that you use every day of the week. Simple relative strength index.
Right.
I trust it. I do understand the argument that most indicators are lagging indicators to a certain extent. But if you follow how this indicator, well, you'll know you've been trading a third as long as me, which is still a long time.
Yep.
If we look at how divergence works, I won't necessarily take the wicks. I'll just take the top of the candles. We have a higher high there, quite obviously.
Right.
And many people, understandably, if you were to take out the session highs and lows, and let's just say, there were no session indicators per se, there's many things that would suggest that you're in an uptrend there. And of course you are in an uptrend there, because if we put moving averages on, you'll see that it's in an uptrend. If I put a half trend indicator on, it would give you an uptrend, etc., etc.
Right.
But I've always believed that the certain indicators will give you an early warning sign that you might want to consider that there's going to be a change in direction. And as you can see there, we've very clearly got a very strong bearish divergence on the RSI.
Yes.
And that, there's no argument there. And the way that I'm not saying I do it the best way, but the way that I personally look for divergence is I use a vertical reference. I don't need to draw anything because you can see it with your eye anyway.
Mm-hmm.
But I join up the points of price action with the indicator. So we're starting from the same place, and then I take it to a point where we end in the same place, when in fact, to be fair, that would be on the high there.
Right.
So we are measuring like for like. That's what I'm trying to say. So,
Right.
So what I'm looking for in a very short space of time on a morning is I'm trying to find an entry on any of the currencies, and I do restrict it to currencies purely because I've got 28 to play with, and 28's more than enough to monitor with alerts, etc.
Totally agree.
So what I then look for is, in fact, I don't look for the divergence first. What I do is I wait for my buy and sell signals to come in. Yeah.
Okay.
So I would be getting that sell alert, and I would be looking at the chart, and I would be seeing, at that point, I would be seeing no divergence. I'd be getting that buy. I would not be interested because I would actually have already have taken out the high of Asia, so I would be only looking on this chart today for a sell.
Right.
And when we approach London, I've now got 2 bars left. I've got the bar before the opening of London, and I've got the first trading bar of London, which I will also trade. Okay.
Okay.
So the bar before the start of London, you can see we get the sell. So quite simply, we have a short trade with a stop above the swing high going for 1 to 2.
Okay.
It's as simple as that.
Makes sense.
When I get a 1 to 1, I move my stop to break even.
Okay. Okay.
Okay, because I don't want to see 1% disappear into a 1% loss.
Right. I got you.
And it's the system is as simple as that. Now, what I'll do is let's go through every single currency from this morning's trading. So what you have here is you can see that in the black hole we didn't break the session high or low.
Right.
Okay. Now, if I was still trading, and I generally wouldn't be trading because this system makes more than enough in the hour. Certainly if you were to move down to a 3-minute or even a 1 minute, because you'll get trades on nearly every currency pair if you come down to a 3-minute or a 1 minute, whereas you won't necessarily get trades on every pair when you move up to the 5-minute, because there just aren't that many candles in the hour. There's only the 12 candles anyway.
Right.
Now, if you or your wife were trading for a few more hours, then what we would be looking to do is we would be looking to take the first divergent sell back into the trading session range, into the Asian range. Yeah.
Okay. I got you.
So what we would be looking to do is we would be taking a look at, first of all, we would be looking at that sell there. So I'd be taking the high to the high, and I'd be looking to see whether there was any divergence there. Now there is bearish divergence there. It is not. It's not as strong as an angle such as that, for example, but it's still definitely bearish divergence.
Okay.
So as a secondary trade, if I was not already in a trade, then the trade on this particular pair would be here, above the swing high, and we'd be going again for 1 to 2.
Right.
Okay. If we get to a 1 to 1, then we're at break even.
Okay.
So again, we come here and we look into the black hole where we have no trading opportunity. And now we are into London. We first of all broke the high of Asia, and there's a fair chance if we were to move down to a 3-minute or a 1 minute, if we go down to a 1 minute, you can actually see on a 1 minute here that just as we broke Asia, the high, you will see this is the reason why I like this system so much, because you literally can make what you need literally in this 1 hour. Because if you take a look at that, there's your very solid bearish divergence on the 1 minute time frame.
Right.
So we would be in,
Right.
and we would be down to our 2%.
Right. It's a good trade right there.
Yeah, it's perfect. And to be fair, if you had the patience and you wanted to take more money out of the market, I know it's very easy to do this with hindsight. Anyone can come across clever, looking at charts that have already painted. But we can probably both see that you've got, if you go from the high up to the next high,
Mm-hmm.
you can also see that we had, going from the same point, we've got bearish divergence again.
Correct.
Now, I wouldn't be taking this second trade, Troy, because it's a one trade system.
Okay.
Because once we've made the money, then trying to push it any further, you're just being greedy. But I'm just trying to prove a point that the system is trying to use this price action level here, the top of Asia there, as the bounce back point if we have strong divergence going in our favor. And if you take that one off and just ignore it, those two trades there, there's your 4% in 1 hour.
Right.
So if
that's really good. Really good.
Yeah, it's a good system. It is a good system. Here we see that we have got nothing in the black hole.
Mm-hmm.
So if we take it up to a 5 minute, and the choice is yours which time frame you actually want to focus on, because at the end of a trading week, it'll all balance out.
Right.
Whether you make as much in a 5 minute, a 3 minute, or a 1 minute. Because you'll get, as I say, you'll get more trades on these lower time frames. But if you want to strictly stick to the 1 hour of the black hole, then on the 3 minute and 5 minute, as you can see, well, even in the 1 minute, sometimes you're not gonna get a break of the Asian session in the hour.
Right.
So you're going to have to drift in if you want to play this system. You're going to have to trade in to London before you find that divergence to bring you in. And I don't see any divergent trade on here.
Right.
There is, if you really were wanting to push it, then what you do have here is you have a higher high there, and you've got an equal high here,
Right.
which potentially could be argued you could take that as a, let's get rid of that line, you could have taken that sell there, but that's marginal. But I'm just pointing out that I wouldn't be taking that one, I wouldn't be taking that sell, I wouldn't be taking, potentially you've got some bearish divergence here, so I could potentially take that one and even that one there. You'll see, you might not have got your 2%, but you certainly wouldn't have lost a dime, because you're gonna hit your 1% easily. If you wait for it to spike all the way back up and take this one, you're probably on that one going to get your 2%, I would imagine. If not now, probably fairly soon. There, you're easily into your 2%.
Right.
There. So if we move into the Australian dollar, New Zealand, you can't do it. I wouldn't do anything with this at the moment, because I want to see the high or the low broken on on any of the time frames, 1, 3 or 5. And you can see we haven't yet done that.
Right.
So I would literally just be walking on by and just letting it go. Here we break the high at about here.
Okay.
We
Yep.
start to move up, and then we make another high here. If we just... It's a very simple system to teach.
Yeah, it's a pretty good system. I like it.
Yeah, and if you can just focus your eye. Someone said to me last week, why don't you use the RSI divergence indicator? Because there is at least one on TradingView.
Okay.
And I'll show you. This one. And the reason that I don't is, as you can see, with any of these indicators, as you're probably aware, Troy, you can go in and you can set all these different settings.
Right.
Which means how far is it going to look back, etc., etc. You know, what period RSI do you want to choose, etc. Which means that once you've locked your settings in, the settings that it's currently set at does not allow me to pick up this divergence that I can very easily see with my own eye.
Right. Exactly.
So you are getting the odd one, but that's not how I trade. You know, I like to see and feel and see where the markets are going myself. So that's why.
I agree.
Yeah.
That's the way I trade.
Yeah. Well, good. I'm saying good only because that's how I trade myself. Yeah.
Right.
So that would be my trade there, above 1 to 2, 1 to 3. This one went 1 to 1. That would have been a break-even trade.
Yeah.
No, let me check. Where's your 1? Yeah, that would have, I think that would have been a... No, it wouldn't. It would have been a 1 to 2 because your 1 to 1 comes here.
Okay.
You would have gone straight to your 1 to 2. Now, you see, I might come across as quite laid back, but that's how I actually trade. And, you know, if I'd got 3 or 4 trades on a morning, I genuinely am done for the day, and I'll move on to study something else or get into customer service or educational videos, etc. Because I don't believe... I used to sit in front of charts, honestly, morning, afternoon, evening.
Okay.
You know, I would never leave the charts,
Right.
and I think that's a very bad thing, because this to me is a business, and to me the business needs respect, and the business can tell you when the business has made the money that you need out of the business, and when you've done that, I don't believe in attempting to give the money back,
Right.
which is what overtrading does, and that's what I used to do.
Yes.
25 years ago.
Yeah. Greed kills. Greed kills.
Absolutely, 100%. We've got here, what do we got here? This is Canadian Swiss. We came out, let's take these off, sorry. Take the drawings off. Right, so we broke the high here. So we're looking for a high, obviously, to give us the divergence that we would need. So I'll take the high to the high, and then I'll take the high to wherever it is to match up with price action above. So there's our very obvious and strong bearish divergence, which would give us the sell just above and go down. Let's do this carefully. Did we get the 1 to 2, or was it a break even? I think you got your 1 to 2 again.
Okay.
Now, let's take those off completely. And let's say that we were looking at this chart on a 3-minute time frame. On a 3-minute time frame, if that had been our time frame of choice, we would have been getting the high to high. We would have been getting the very strong divergence.
Yes, it is.
Yeah. Sorry, let's see again. Did we get our, there's, yeah, we were down to 1 there. It didn't retrace back at all, really. Now, I actually taught this to somebody on Thursday, and we went through 2 weeks of trading every currency. And I think it was on the 1 minute, and we made, it was something like 45% profit, and the win rate was phenomenal. And then on Friday he was messaging me throughout the day because I think he said he'd taken 2 trades and he'd had 2 losers.
Okay.
And what frustrates me about people is that they don't understand that you know, trading is trading.
Yes, that happens.
Yeah, if your trade sizes are of a value that if it loses, it's not going to hurt you at all.
That's it.
Then, you know, what does it matter if you have 5 or 6 losses in a row? It doesn't matter.
I'm still ahead.
Yeah, absolutely. Especially if you know, you're going into the system with your eyes wide open, and you know that your profit is 2 times your risk.
Yeah.
You know, so 2 losses, 1 win, and you're back to break even again. You know. So.
That's it. 2 to 1's the only way to go. I mean, you never go 1 to 1.
Absolutely. Yeah.
It's like walking into Vegas.
Yeah. Yeah.
You got to be prepared to lose.
Yeah. Dead right. CAD yen there, you can see we've got nothing because we are yet to touch the area of price action that we're interested in. There we have one here. Now on the 3-minute, let's just walk through it, because we've got a, if we were to take, say, we'll go the high to the high to the next high. I'm not saying until I analyse it properly, because I'm never in a rush to place a trade.
Right.
I wouldn't be taking that trade because I don't see any clear bearish divergence on it. Yeah,
Right.
I can see where it went.
Right.
And it's very
can't
easy. Yeah, it's very easy to say, oh, I would have taken that trade. Of course I would. Who wouldn't? But if we take the drawings off, let's move it to a 5-minute, and let's say we were trading the 5-minute time frame. Then even then, I cannot see. You see, it's very easy, and I won't do this, but I'll just point it out. It's very easy to do this. It's very easy to take that there and draw these lines.
Right.
And say, well, there's divergence there. Yeah, but that's not even in the same session.
Right.
When I look for divergence, I want to see the divergence in the same trading session. I don't want to have to go back all this way back in time to see some divergence. Not unless I'm literally hitting another price action resistance point.
Okay.
Up here, if that makes sense.
I got you.
You know, but as far as this is concerned, once I'm entering the London session, I want my divergence to be based in the London session.
Okay.
So if we bring it into the London session and we have a look and see if anything's happened, well, we obviously broke the highs quite clearly.
Right.
And we had a high here, we had a high there, and then which with divergence, and then we had a sell here. which,
Right.
as we can see, we would have been stopped out.
Exactly.
You'd have been stopped out there. Now, I don't know whether I mentioned, but we have two trades. If you're going to trade anything and you get stopped out, you trade one more time if you see divergence, but only if you see divergence.
Okay.
So here you get a stop, you're going to get stopped out up here, and then up here you get a new high.
Right.
Your new high is clearly divergent in London, very clearly divergent. So that sell there would have wiped out your loss and brought you 1 point back into your bank.
Right.
So you've got two trades, but they both must be supported with strong divergence in the same session. We move through to the euro. We'll start on the 1 minute time frame. Now let's think of the rules first and foremost. The rules first and foremost are that we are looking for a break of the high or a break of the low.
Right.
We get the break of the low. So the only thing that I'm interested in is going to be a long trade with divergence to see if we will move back in.
Okay.
Okay. So if we draw this out, we can clearly see, and it's all right me saying, we can see what happened, but the fact of the matter is, when you're trading this, Troy, what you've got is you've got these alerts are going to be shouting at you every time one pops up.
Mm-hmm.
So you will have the ability to come and test all this, because nothing repaints. That's what I'm saying.
Right. That's great.
We can do a retest in replay mode, and none of this repaints. So there we see very, very clear bullish divergence.
Correct.
Now we can also see that we're not going to make any money, but we
Right.
can also see that we are not going to lose any money, because we get our 1-to-1 and then we come back to break even.
Right. Okay.
Now, there's nothing wrong with you taking the partial if you want, but what I'm saying is I don't do that. I'm going for the 1-to-2, or I'm going for a break even.
Okay.
Now, once I saw that, I would then have a second opportunity to go in. But in all honesty, I don't think I would be taking this because I don't see. I see a hint, but it's not. It's if anything, I don't see any divergence there. I want to see that, and we're not getting any bullish divergence at that point there for me.
Right.
So I would be leaving it. Okay, so we've got the Euro CAD. We have a look at all of the time frames on this and see what would have happened on each of the time frames. We break. When we break, we come down. Your RSI is coming down.
Mm-hmm.
Your RSI at that low here is still coming down, if you can see.
Right.
Your RSI, when you make a new low here, your RSI is now moving back up. Can you see?
Yes, I do.
So there, we will be entering a long trade. And let's just see where the stop is. Stop's going to be there. You'd have not made your 2%, but you wouldn't have lost anything either. So you're in.
Right.
you're in a break-even trade. Now, when we come down to the next one, we can see here that we've got a lower low just there. And if we come down, we can see that the RSI is now telling us is the time to move back up towards the Asian low. So we'll be placing our long trade again on this candle.
Okay.
This again may be a break-even trade, another break-even trade.
Right.
Now you've seen 3 or 4 break-even trades, Troy, that all of them actually went on to two points profit.
Right.
So you are not the same as me. You may decide to go for the 2 points profit and risk the 1% loss. Does that make sense?
Yes. Yeah, I understand.
You know, so that's a personal preference.
Right.
I am. I don't know what your preference would be. You can have a think about that. But I'm more of a
I'm more or less a break-even guy. Yeah,
I was going to say,
I don't get greedy.
yeah.
Yeah.
I'm super conservative because even small losses hurt. You know, we like to walk away. A break even is a winning trade. It's not a losing trade.
Right.
You know, that's what we've got to remember. And just out of interest, let's take those off. And let's look at a 3 minute. See what would have happened today. With a 3 minute, you've got you've made a low there, and then there's an argument to say you've made an equal low, really.
Yeah. Very close.
Extremely close, but you've made a very significant move bullish on the RSI at that point, on that very bearish candle. It's come down, but it's much higher than it was here. So you would have had, don't forget, we trade the first candle in London for the first trade.
Okay.
So which is there. We go 1 to 1. Let's just see where we go. You may possibly have broke it even again, depending on how lucky you were.
Right.
Best case scenario, you would have got your 1 to 2. And let's push it to the 5 and see whether we had anything there. Yeah. But again, in my opinion, you can see that this wick there, that wick there is going to bring you to break even.
Yeah, true.
But no losing trade again.
That's it.
This time we'll go from top down, so we'll go from 5 minute down to 1 minute, Euro Swiss. First of all, if there's no bearish divergence, then there's no trade.
Right.
It doesn't matter that we can see how well it would have done. That's not the point. So we're going to go from the high of the session to the high, and we're going to join up the same point. And sorry, I picked up the wrong tool, but you can see that there's no bearish divergence there. That goes up.
Right.
Yeah. So just take that off. Now what I'm just looking for, let's just check while we're here, whether we had any bearish divergence there. It's going to be close, and I don't think we did, but
Yes.
you know, it is a business and we've got to check these things. That's bullish.
Right.
Let's come down, go for a 3 minute. Minute, again, I can't see any bearish divergence. because you're looking from this point here.
Right.
You've got bullish divergence. Again, it looks very good, but I wouldn't have taken it because I can't see bearish divergence on the RSI. It's slightly above here.
Right. Almost equal.
Oh, exactly. Yeah. On the 1 minute, we've got one opportunity here. Let's see where we've gone. Now I'm trading the black hole.
Okay.
So if I'm trading the black hole, no, I can't see that anyway.
Mm-hmm.
Because to me, we're coming to there, and there's no bearish for me there either. Again, you know, it'd be very easy to create an argument to say that there was a bit of divergence here.
Right.
Not a perfect trader, but what I'm saying is I wouldn't have taken it. I wouldn't have been confident enough of taking that trade.
Yeah, I would have stayed away from that.
Yeah. Let's take these off. We'll go from the bottom up for 1 minute. Okay. Okay, so we've broken the low.
Mm-hmm.
We are looking for reasons to come back in. That low there is no bullish divergence. We then get another low which is definitely bullish divergence.
Mm-hmm.
And you would have had a losing trade here.
Right.
We then drop again, and you can see you're going to have another losing trade there.
Right.
So that currency is a 2-point loss for us today.
Right.
On that time frame. On the 3 minute we break, we make a new low which is bullish, so we would be looking for a buy.
Mm-hmm.
The buy comes in and it confirms again the bullish, so again if you'd have moved from a 1 minute and followed it on a 3 minute, you would have still have had a losing trade on here.
Yep.
Now going down here, if you're following your lows down, you've had a low, an equal low, a lower low, lower low, lower low, lower low, and then here there is, pull that out the way, oh sorry, we take ourselves to this one here. We've had one losing trade. If you follow it down from you do have bullish divergence, because you've got your bullish divergence, which we don't even really need to draw because we can see it there, that one there. So on that one there, just draw that back on, because there's a wick there that might have got you out.
Okay.
I think the wick did get you out. Yeah.
Yeah.
2 losing trades. And lastly, on the 5 minute, if we'd have had anything on the 5 minute, you would have had down here, this is just bearish, bearish, bearish. Down here, you're as bearish as you can be, and then here, you then get a very bullish turn there.
Yep.
So on the 5 minute, you would have made the better decision. On the more solid time frame, you wouldn't be there yet. You'd have got your 1%, and I think you'd have had a break even. Oh no, you're still in that trade. You're still in that trade going for your 2%. That would be on the 5 minute.
Okay. Yeah, it's funny how the time frames do this to you. Right?
Yeah, absolutely, yeah. And the thing is, when you start out on a morning, there's no second guessing which one you should be on. That's the problem.
Right.
But once you've made the decision, you really do have to stick with it. On the Euro Yen, you can see we haven't taken the range out.
Right.
On the Euro New Zealand, we have, so we'll go top down. So we make a low, we then make a higher low.
Right.
You would then have been stopped out on that trade there. So there's a loss on that trade.
Yep.
There is every chance that we could be getting another buy, as long as when we get the buy, the RSI is obviously way above here. If we move to the 3 minute, normally if you get a loss on the 5 minute, you'll get a loss on the others, but let's see. Not necessarily the case on well, there is actually, because your buy is coming in here, so you would have had the loss on the 3 minute. And on the 1 minute, looking for your divergence coming down, you would have actually had your buy here, just broke here. You'd have had your buy there, and you've had your loss straight away again.
Right. Yeah, I see him.
Yeah. Euro USD. We haven't broke. Yes, sorry, we did. We broke the high. So when we break the high, we already have a divergence that we can clearly see, because you've got your bearish divergence here.
Mm-hmm.
You'd have made a loss, and then you'd have made a win. So you'd have made 1 point.
Right. Okay.
On a 3 minute, you would have been in a trade at the moment. You'd have entered it here.
Yeah.
You'd be moving towards your 1-to-1, because I think you would have just been short of it, but you'd have been in your trade profitable at the moment. On the 5 minute, same again. You're currently on the 5 minute, to be fair, there's an argument that you would not have even have been in a trade at the moment.
Right.
Pound Australian dollar, we break the high. We then come in here where we have a high on the RSI. But 10 minutes later, when we make another high or an equal high, you can see the RSI is dropped. It's starting to come down here. So you can see that angle down. That's 100% a sell for me.
Okay.
There's your 1, and it hasn't retraced since then, and we're pushing down to around there, hopefully.
Yep. Okay.
That's a nice trade. 3 minute. On the 3 minute, again, we go higher. I would be more than happy to take this as, again, bearish, because I'm at the price action point that I want a reason to sell. You know, I've just got to sell, and the RSIs have made the tiniest of hint that it's coming in the right direction, so I would have taken that. Again, you're coming down for the same place, obviously.
Right.
And on the 1 minute, the 1 minute you'd have got stopped out, and then your second trade would have got you the 1 point already.
Okay.
Pound CAD will do 1 up to 5, and here we probably got in a lot earlier. You're bullish, then you're slightly bearish here, slightly bearish there.
Right.
You would have had a sell just on here. Apologies. You'd have had a break-even trade.
Okay.
The break-even trade would have been about here. You would have had a higher high, and then you would have had a losing trade. Can you see?
Yes, I see that.
So we'll move up to the 3 minute. The 3 minute, you had a higher high, you had a slightly lower, you would have had a losing trade there, and we've come all the way up. The RSI is now starting to come down. Unfortunately, you'd have just missed it on that one again, because it's just gone slightly higher before starting to come back in.
Right.
And on the 5 minute, you can see worst case scenario, you're in your second trade and you're coming down.
Yep, I see that.
And hopefully you'll get your 1 point out of that one.
Yeah, hopefully it keeps going.
Pound Swiss. We do have the divergence, obviously. Don't know if you'll get your 1 to 1. You'd have been lucky. It's
Yeah, that's a lucky trade there.
yeah, you'd have been very lucky to get that.
Yeah.
And on the 3 minute, you'd have been looking to sell, and you'd have got it there. Again, putting your stop above the wicks is safe, but it can stop you getting to where you need to be as well. Again, lucky.
Right.
And we both know that spreads might not have played ball with you.
Yeah, spreads are not your friend, that's for sure.
Absolutely. Absolutely. Here we're looking to come back down.
Right.
In reality, you've actually got bearish divergence here, so you're going to get stopped out on that one and probably stopped out on both of them. Pound yen. If you actually were to study the system for, say, a couple of weeks, which is very easy to do,
Right.
what you're going to find is you're going to find the most effective way to trade this system is to pick a time frame and focus on the black hole, rather than trying chase into the London session,
Right.
because
Okay.
once London starts, it just takes off, and if you're going in the wrong direction, then you can see series of 2 losses in a row. So this is why I call it the breaking Asia. For me, it's the black hole.
Okay.
And if we're not breaking in this black hole area, I'm doing myself a disfavor, really, trying to follow this through, because the system, as I say, is based around the highs and lows of between 7 and 8 in the morning.
Okay.
And you will find the odd days where it simply doesn't happen.
Right.
It's just not happened. Now, we did have a break of the high there, and then on the 5-minute you've got a higher high, you had a higher high there, you went up, and then you showed a little bit of bearish divergence here.
Right.
And you may have wanted to have tested a trade here, which would have been a break-even trade.
Okay.
That trade there, unfortunately, you see the wick would get you.
Yeah.
3 minutes, you're going to see exactly the same.
Okay.
That you're going to get a break-even trade there, and then the 1 minute probably the same again. Well, in fact, on a 1 minute, you actually get your first trade is actually a losing trade, which is in the black hole.
Right. I see that.
Yeah. New Zealand, Canadian dollar, we didn't do anything.
Right. Didn't break.
New Zealand, Swiss, we did break. 1 minute would have been a losing trade. 3 minutes. You've gone higher. To be honest, Troy, I'm not saying that I can actually see any bearish
Right. Very close.
It is. And
Yeah.
with, when you've got 28 charts flying around, just wait for an obvious one.
Right.
That has to be, my advice, because I don't believe in just trying to put a trade on because I've only got 2 trades running and I want a third one. It's just not what the game's all about. Because if I show you, what can I show you? I'll show you something in a second. Take that off. There is no bearish divergence as that goes up.
Right.
So we can't do anything until we get higher highs. We get higher highs here, where we do see bearish divergence. That would have been a losing trade.
Right.
And I couldn't, in all honesty, say that I would have taken the next trade because I can't see bearish divergence on it.
Right. Quite even. Excuse me.
Bullish. bearish. Well, it's not even bearish, Troy. If you look at it, it's flat. It's flat.
Yeah.
And it's not what we're looking for. We're looking for strong divergence, which we've seen many, many times.
Right.
Such as this one here. You know, when you see them strong, then, you know, you're going into it with confidence. You know, this gives me a lot of confidence when I see this.
Yep, that's a good one.
Definitely. You know, no resistance, straight to 2% profit on your account.
Right.
Walk away. Don't place another trade all day.
That's it.
Genuinely.
Yeah, 1 or 2% a day is great.
Yeah, genuinely.
Yeah, that's awesome.
Yeah. This one up here, you've got to sell, but going up there, if we're being true to ourselves, you've got no.
Right.
You've got nothing. After breaking the low, trying to find a reason to come back in, I'm just trying to teach you how the only reason I want to look for buys and sells is to go back into ranges based on strong divergence. And that's about as strong as you're ever going to see.
Yeah, that's pretty strong.
Yeah, and that there is a 1 to 4, possibly.
Yeah.
US yen, we haven't broken out.
Right.
So that's the system. That's what I'm doing, and that's what it's done today. If we top them up probably on all the time frames, doesn't matter which one you would have traded. You know, you'd have come out with anywhere between 2 and 10% again.
It's quite amazing.
It's a good system. It's a good system.
Yeah, it definitely seems to be. You know, it's I have to get up in the mornings, but yeah, it's a good system.
Yeah, to be honest, it's even tough in London. You know, 7 o'clock is an hour early for me, you know, at my age, but it's certainly worth doing because once I've done it, you know, I can spend the rest of the day doing whatever I like to do.
Right.
Rather than, you know, still sitting here 5 hours into the afternoon trying to find another trade. Because once, I tell you what, once New York opens, any time from, I'm talking London time here, from like 1 o'clock onwards, the markets just spike all over the place, even with no high impact news.
Yeah, I've noticed that lately. It's really moving.
Yeah.
It really does move.
Yep, so. Yep, it is. But I'd be very interested to see how you do with this week, please.
All right.
Really would.
I'll keep you informed.
Really would. Well, really nice to meet you. I'm sorry it was a slightly delayed start. That was purely because I did genuinely forget it was bank holiday.
No problem.
But I'll get the video rendered and I'll get it across to you before 12 o'clock, which is 20 minutes.
Okay, sounds good.
Anything you need, Troy, you know where I am. Just message me and I'll get right back to you.
I sure will, Chris.
Lovely. Thanks again.
Thank you very much for your time.
Yeah, I'll speak soon.
All right, sure thing.
Thank you. Bye.
Have a good day. Bye-bye.